Good evening, everyone. Time for another silver update. This is the dollar yen cross daily chart provided by netdenia.com. You can click on the link below. If you've been following my blog, you know that I've been pointing out that we were looking for central bank intervention as we approached the Fukushima lows. Really, the price of about 76 was the price I was looking at as a floor that had been set by the central banks. Now, you know that the central banks of the world are in a race to print money to oblivion. So, as the United States and the European Union and the others print money to bail out bad debts, then of course that's going to result in a strengthening of the other currencies. So it's necessary to keep the game going that the central banks of the world each participate in this race to the bottom. Of course, the race to the bottom is going to be against gold and silver, because ultimately that's going to be the real currency that all these other fake currencies are measured against. But you can see that we had what I will describe as a stealth rally. I've been tracking the rallies in the dollar yen cross and of course their central bank intervention. If you remember, a few days ago I mentioned that the dollar seemed to be rallying against the yen, and I suspected there might be central bank intervention. Today we came out and had an open admission by the Bank of Japan that they were in fact printing up about $300 billion worth of yen. So that's the equivalent of the entire Greek bailout. So you can see the chart lines here, the trend lines on the chart are fairly significant because our secondary trend line has already been breached. We come down here and we have 2 touch points, and then we actually 3 touch points. We broke above and then we're rallying now, and this is on admitted central bank intervention. The next descending trend line is this big line that goes all the way back to mid or late summer 2008, which was the very beginning of the financial crisis. And you can see we're just touching that line. So will we break out to the upside? Will this be based on continued central bank intervention? Or will there actually be some type of fundamental shift in the market? I can't say, but it appears that the dollar is very strong against the yen right now. We'll see how much the Central Bank of Japan is willing to do. And of course, normally when these things happen, it's not just one central bank acting on its own as a rogue, but it is more a coordinated intervention by various central banks, something like we had at the Fukushima low, which was a coordinated world central bank intervention to weaken the yen and prop up the dollar. So let's go over and look at silver real quick. We are kind of just treading water here. This is looking like a rounding over pattern. If we pull up the MACD, we want to see where we're at here, and you can see we're kind of rolling over on the MACD. We're rolling over on the price. You'll note that this MACD is significantly higher than this MACD. So this is somewhat of a divergence. A lot of the technicians will say this is a bearish indication to have the MACD higher while the price is lower. That is not necessarily the case. We could easily turn up and break through and go higher, but of course the silver stackers are looking for coins to stack, and that's covered in the latest Office series that I did. It's obvious when you look at the amount of dollars that Americans spend. I documented the numbers that Americans spend on frivolous junk such as weight loss programs at $42 billion, bottled water at $12 billion, and various other junk that Americans spend their money on. So we have this consumer-driven society. A very, very, very small percentage of the society understands savings and even a smaller percentage understands why it's important to save in precious metals. So let's look at the gold chart real quick because it's not as weak, and we seem to be, again, rounding up here. We're forming this kind of hybrid pennant formation. It's not a real pennant, but it's kind of a hybrid. So we're coming to a resolution, but that may be a ways off. I seriously doubt whether this level will be tested again. You can see it's been penetrated twice, actually 3 times on the downside, and then we've rallied. That's roughly 1550, a little bit higher. So gold is still very strong. When we go out to the weekly chart, you can see that gold really is still in a very strong bull market. The correction level, we've got multiple correction levels. You'd probably have to draw the line from about there down to 700, and then here to about 1,000, and then the next one's going to be here to about 1650. So we're still very strong. This is definitely a bull market. All of the people who said that the gold market is over, the bull run is over, at least by these price reactions, we can definitely say that they are wrong up to this point. There is no way that the gold bull is over, and you can see down here on the MACD we have this kind of questionable cross. Nevertheless, we have a cross. We never even went down to the below the zero line. Of course, with silver, if we go over directly to silver and do a comparison, we know that silver actually touched the lowest low, actually made the lowest low on the MACD it's ever made. So silver is set up for a tremendous bull run. I don't think there's any reason why $50 is out of the question. I'm not going to give any time frames, but I think that $50 is really a reasonable price for this MACD to get back up to some type of level like it has in the past. So let's take a look at the coins real quick. I pulled up the Gainesville site, and there's still a lot of exclamation points. Well, not a lot, but a few. So you've got some really good prices here. If you look at our spot price on silver, you've got about $33.71 right now on the spot. And if you go over to Gainesville, you've got some really interesting prices here, especially when you get down to some of the rounds. You can look and see this 1 ounce Sunshine Mint round is $34.78, and you've got a 1 ounce bar of $34.68, and you've got the Buffalo round for $34.54. So it might not be the best time to buy, but if you've got the money and you're buying right now, I've got quite a few of these Buffalo rounds. I like them. They're not my favorite coin, but they're a pretty good coin. So it's really a good deal if you think that silver's going to be strong for a while. If you're not looking for a big dip to buy, you really can't go wrong with a price of $34.55 on the bank wire for that. So we're looking at $33.70, $34.55. So really just about 85 cents above spot, you can pick up these Buffalo rounds. So that's a really good deal. They say 75, so that's a really good deal for that bullion round. So I'm going to say that's my favorite for the day. Now let's get over to the main story. This is going to be very controversial. I know I'm going to have a lot of people get very angry at me for what I'm about to say, but after watching the situation in Greece and watching the people justifying the throwing of Molotov cocktails at the police and just the incredible violence that's going on in Greece, I wanted to do a little juxtaposition. So I want to start off with the country of Singapore. Now, if you're familiar with Jimmy Rogers, he is one of the greatest traders in the world. He is a self-made man. He's not a George Soros, although he was partnered with George Soros. He's not a Warren Buffett. He's not a Ross Perot. He's not a government insider. He's not an insider of any sort. He's just a man who follows his own convictions and trades based upon the fundamentals, and has gone from being worth a few $100s to over $1 billion. So, as you know, he has moved to Singapore. He's not renounced his citizenship, but he does reside in Singapore because he sees the type of socialism that we already have in Europe creeping into America and creeping into the West, and he's moved to greener pastures, which probably a lot of us should do if things continue this way. So I wanted to look at the economy of Singapore because this is really striking. We're going to look at some trading economics charts when we look at this, but I'm going to call this success versus failure. And the reason why I'm calling it that is because when we're looking at the problems in Greece, when we're looking at the problems in Europe, when we're looking at the problems in the United States, and a lot of people have criticized me saying, well, you shouldn't criticize Greece because the United States is... That's not the point. It's not the point that the United States is in one position and Greece is in another. The question is, what type of system are they embracing? Which direction are they moving? So let's look at Singapore. I want to read this entire statement about Singapore, and then I'm going to do some comparisons between Singapore and Greece. Today, Singapore has a highly developed market-based economy, based historically on extended entrepot trade, and we'll click on that real quick here. Entrepot is a trading post where merchandise can be imported and exported without paying import duties, often at a profit. Okay, so that's very clear that Singapore has a very low tariff system. They welcome trade, and of course historically they've always been a trading hub. Along with Hong Kong, South Korea, and Taiwan, Singapore is one of the original 4 Asian tigers. The Singapore economy is known as the freest, most innovative, most competitive, and most business friendly. The 2011 Index of Economic Freedom ranks Singapore as the freest economy in the world, behind only Hong Kong. According to the Corruption Perceptions Index, Singapore is also consistently ranked as one of the least corrupt countries in the world, along with New Zealand and the Scandinavian countries. So here's your 2 keys here. You have a free market-based economy, okay, and they're going to say, everyone's going to say, well, what about the corrupt bankers? And you have the least corrupt countries. Okay, you have to remember, these Asian countries, this is the country where they caned that guy for defacing cars. This is a country where you can be arrested for spitting in the streets. This is a country where if you chew gum and spit it out and don't put it in a receptacle, you can be fined. So this is a very, very strict legal system that punishes corruption. Very similar to some of the things we've seen out of China, where your financial criminals have actually been given the death penalty and executed. Singapore is the 14th largest exporter and the 15th largest importer in the world. The country has the highest trade to GDP ratio in the world, signifying the importance of trade to its economy. The country is currently the only Asian country to have a AAA credit rating from all 3 major credit rating agencies, Standard & Poor's, Moody's, and Fitch. Singapore attracts a lot of foreign direct investment because of its location, corruption-free environment, skilled workforce, low tax rates, and advanced infrastructure. And we could go on, but I wanted to show you the size here so that you can see. A lot of people are going to say, well, it's because of this, it's because of that. Let's look at the size, okay? This is the area that Singapore occupies. Singapore is a total of 274 square miles. Now let's go over to Greece. Greece has an area of 50,000 square miles. Greece has a population of 11 million. Singapore has a population of 5 million, so roughly half that. Greece has a GDP of 318 billion. Singapore has a GDP of $291 billion. So with roughly, we'll have to take 50,000 divided by 274. That's 200-fold. You've got a tiny island that actually has a per capita GDP of twice that of Greece. 2 point something times that. So the question is why? Now, a lot of people are going to say, well, it's because of they're in Asia, or it's because their history, or it's because they're some anomaly that people are going to cite. Now, I'm going to argue that that's not the case at all. I'm going to argue that it's because of the economic system that Singapore has adopted. Now, it's very interesting that when you look at one of the big criticisms that is made about Singapore. Now, these facts are startling. They just go on and on. Singapore is a world leader in several economic areas. The country is the world's 4th leading financial center. It's the world's 2nd biggest casino gambling market. It's one of the world's top 3 oil refining centers. It's the world's largest oil rig producer and a major ship repairer. Their port is the 5th busiest port in the world. The World Bank has praised Singapore as the easiest place in the world to do business and ranks Singapore as the world's top logistics hub. And the country is also the world's 4th largest foreign exchange trading center after London, New York, and Tokyo. Now, let's look at the unemployment rate in Singapore. The percentage of unemployed economically active people above the age of 15 is about 2%. Singapore has the world's highest percentage of millionaire households, with 15.5% of all households owning at least $1 million US. Despite its relative economic success, Singapore does not have a minimum wage, believing that it will lower its competitiveness. The country also has one of the highest income inequalities among developed countries, coming in just behind Hong Kong and in front of the United States. Acute poverty is rare in Singapore, but the Singapore government has been criticized for not providing a more comprehensive social welfare safety net and allowing some Singaporeans to fall through the cracks. The Singapore government has categorically rejected a generous welfare system, stating that each generation must earn and save enough for its entire life cycle. So the Singaporean government has steadfastly rejected all socialist schemes. Now let's go over and look at a Zero Hedge article. This is one posted today. This is pictures from a Greek soup kitchen. And you can see the poverty that's increasing in Greece. Things are getting really bad there. Of course, socialism and large governments bring poverty. Now, let's look at the Trading Economics site. This is a chart of Singapore's GDP. You can see in 1980, Singapore had a GDP of roughly 10 on this chart. 10 billion US dollars. They are now over 200 and approaching 250. That's a 22 to 23-fold gain since 1980. The unemployment rate in Singapore if we go back to the earliest date we have, 1992, you can see that the highest unemployment rate that's ever been reached was during January of 2004 when Singapore hit 4.5% unemployment. They are currently at 2% unemployment rate. If we look at the current account, Singapore has run a consistent positive current account. So they don't have any problems with their imports and exports. They always make a profit. Now remember, we looked at the size of this place. It was 274 square miles. And let's look last at the government budget. The government budget, going back to the earliest year we can find, shows the percentage of GDP is negative. They actually are running a very, very small government. So let's jump over and look at the statistics for Greece. So we're going to start with the unemployment rate, and we'll go back to the beginning. And you can see that starting with the financial crisis and now going into the third and fourth year into this thing, they are now over 20% unemployment rate. Now, if you remember, the highest unemployment rate Singapore had ever seen in its history that we saw was 4.5%. That is half of the lowest rate Greece has ever seen. So Greece is collapsing in a socialistic nightmare. Now let's look at the GDP. You can see that the GDP, if we take it back to 1980, and that's where we had a 200-fold rise in Singaporean GDP. Back to 1980, really we're at 50. So we've had a 6-fold rise in GDP in Greece since 1980, as opposed to the 20-something-fold rise in GDP that we had in Singapore. If you look at our current account, you can see that back to 2000, as far as we go back, Greece has consistently run a negative current account. So by all measures that you can find, Singapore is a tremendous success, and Greece is a tremendous failure. So, is it just coincidence that Singapore is a pro-free market, free trade, low tariff, low tax, friendly to business, friendly to finance, low unemployment country, while Greece is a country that is now drowning in debt, has rising poverty, and is quickly being destroyed? You decide, and we'll talk to you next time.